right now interest rates are low, the economy is doing well, earnings growth will be somewhere between 5 and 10% excluding energy. Earnings will probably be flat including energy. So that's an environment where you're going to have mid to upper single digit returns in the stock market. But remember, it's kind of like you're using the Farmer's Almanac to predict the market. It's akin to using it to predict the weather.
I got a gut feeling that it's going to be a better year than 2015, probably just as volatile as 2015 was. You have a political situation with the Republican candidates, fighting with the Democratic candidates, and the election setting up for 2016 is going to be very contentious. Some of the things that have happened in Washington over the last couple of weeks give us heart that maybe our politicians are going to be able to work together.
If Hillary Clinton gets on the airwaves and blast the biotechnology industry and it goes down, I think you take advantage of that. If they blast the tobacco industry, perhaps you take advantage of that. If you're seeing a Republican move ahead in the polls, perhaps you take more of a look at some of your coal stocks. And so we'll have to see how that pans out. But I will say, though, short-term discrepancies in pricing in the market because of the rhetoric will be opportunities if they're politically motivated. Because over the longer haul, Republican or Democrat, the market will pay more attention to the economy.
You got to think at some point in time during 2016, energy kind of hits a bottom here, and those companies start to at least establish a little bit of some footing as we go through 2016. Maybe a little bit premature, but we are looking very closely at some of those bigger names.
The longer this goes on and the more people realize this is the real deal, that energy prices are going to stay low for a period of time that's longer than you think. I think eventually Americans will loosen their purse strings up and start spending some of it. And I think 2016 could be that year where you'll see restaurant stocks do better and some of the consumer discretionary stocks do better.
Historically, in a rising interest rate environment, the financial sector does very well. I think one belief that we have is that the twice said gradual in the Fed's statement here at the recent interest rate hike is really going to play out. If you look at how slowly the Fed raised rates for the very first time here, you got to believe that the Fed's going to be very, very cautious with everything that happened in 2008 and how long interest rates were basically stuck at zero, that any interest rate hike is going to come with a lot of contention and debate.
I think the healthcare sector should still do well. I think this lid we've had on biotechnology, some of the larger ones, will do well. I think Europe's going to pick up a little bit, so we're putting money there. And I think you've got to also look at individual names, because if an economy is growing at a modest pace, a moderate pace, whole sectors you probably can't just throw money at it and expect it to go up. So you're going to want to be selective in putting your investment dollars to work and pay attention to value. It's like buying a car. I love a Mercedes, but I'm not going to spend the 80 grand on it. So you got to be value driven and look for investments as they come down in a choppy market. Maybe you'll get Chipotle at $460 or $450 a share rather than where it is now at 500. But on a broader base, using a broader brush, we like healthcare. We like those consumer stocks that will benefit from lower energy prices. But overall, I think you have mid to upper single digits with, if history's any guide, probably a 10% correction along the way.